Hey everyone, Jeffrey Bieber here, Senior Investment Strategist over at ewotrader.com. Welcome to Earnings Call. And if you've been with us for a while, you know exactly what we do here. If you're not familiar with us, we talk about how to profit on stocks through their earnings announcements, okay? There's a couple of ways to do this, and we go over both ways each and every week. This week, the week of April 28th, finds us in the throes of earnings season now, and we have lots of big cap, meaning large cap, big popular names declaring earnings this week, all this week. And as an example, last week we had about 400 stocks declaring earnings. This week we have over 800. So the number of stocks have doubled. And then you're going to want to hang out with us till the end of our show because we're going to talk about last week's trade. As a little hint, we're back into the winning, chalk up another winner. And then we will talk about this week's trade as well. So sit tight. Here we go. It's important to note that on weeks like this, you probably want to use the chapter feature that's featured at the bottom of our videos because we talk about stocks that you might want to know about. And we have, as I mentioned, a lot to go through this week. So here's my list. It's broken up into two halves. On the left-hand side, we have stocks that we call our breakout stocks. And these are stocks that I do a publication called Delta Neutral Breakout. What we're looking for here are stocks that are going to double-digit moves. Not we, but the market has forecasted double-digit moves for these stocks. And on the right-hand side of the ledger, we talk about what we call quiet stocks. And this is for another publication I do called Delta Neutral Income. All right, now these stocks move single digits, or the forecast by the market makers is for single-digit moves on each of these. And we go through many of the top names each and every week. So let me start off by we're going to talk about quiet stocks first. All right. And let me give you an example of a quiet stock. Again, this is an example, Pfizer. I'm going to show you the chart because this is an example of a quiet stock. As you can see, it's trading in a $7 range for a long time, $6, $7, and around its earnings announcements, which are highlighted by the vertical red line and by the ellipse that you see. This stock only moves a couple of points. I mean, we're talking about 3%, maybe 4% through its earnings announcements. And so there's a particular type of strategy that we trade where we sell premium, but we're not naked on selling premium, meaning selling options. We are protected. Usually by trades like iron condors or condors is our favorite methodology here. So let's go ahead and take a look at our list this week because there are a bunch of popular names. We have financials and everything from big banks to oil companies. All right, so let's go ahead and take a look at the list, and we're going to start off with a financial here as we begin the trading week. And on the list, you'll see here we're going to start with Visa. All right, so Visa, as you see here on the chart, it will declare on Tuesday, April 29th, after market close, and the expected move here is less than 4%. So, if we go back through time, you're not even going to be able to recognize where the earnings announcements are, all right, because this is what we call a quiet stock, okay? And yes, it has shown a little bit of volatility here, but again, this volatility we aren't concerned with. We are concerned with what just historically happens through the earnings announcements, and then what the market makers, the option market makers, the option specialists are calculating as the estimate move, and we are deciding what type of option strategy to trade. All right, so here with a single digit move, we would be typically sellers of premium. Okay, so next on our list is Microsoft. Now, Microsoft has earnings coming up on Wednesday, April 29th, after market close, and the expected move here is less than 5%. Now, what's amazing here is Microsoft used to be one of our breakout candidates. It used to move double digits around earnings, but now Microsoft is a much more mature company. It's in the actually the mature part of its life cycle. All right, and you see that it is a $380 stock. And just as I kind of showed before, you go through here and you might be able to see earnings announcements if I don't have them highlighted, but it's hard to tell where some of these earnings announcements are because a lot of times these big moves or the gaps, those aren't the earnings announcements many times, okay? Those are different things that are up and coming. So right now the market makers are forecasting less than a 5% move for Microsoft. And again, they declare Wednesday, April 29th after market close, all right? So let's see here. No, that wouldn't be Wednesday, April 29th. That would be May. Let's see here. Ooh, April 30th. Sorry about that. All right. So then we have Caterpillar. All right. There it is. April 30th. Another stock declaring on April 30th. This will declare before market open. Caterpillar has an expected move of less than 6%. All right. So single digit mover there. Now, as you can see, Caterpillar, like many stocks, is in a downtrend. And what's unique here is you're going to see stocks that are in a downtrend that are similar to what the broader market is doing, and then we have stocks that are in an uptrend, believe it or not. And those are especially interesting because we're going to see what the forecast is for those stocks. All right. So Caterpillar, big company, declaring Wednesday, April 30th before market open, and we will keep an eye on that. All right. So then we have Apple. All right. Now, Apple will declare on Thursday, May 1st. Believe it or not, we end April and go into May this week. All right. Thursday, May 1st, after market close, and the expected move here, even though Apple is in the news all the time, the expected move here is less than 4%. Okay. So again, these gaps that you're seeing are just news events. They're not the earnings events. Okay. They're not the earnings calls. They're not the move, after the earnings announcement. And again, we're expecting a quiet move. Now, even if Apple, with everything that's going on with Apple, even if they get, let's say they disappoint and they move 6%, really that's not enough to get into that double digit move that oftentimes is required by a different strategy that we do for those breakout stocks called a straddle or a strangle. So here I would be looking to be a seller of premium over a very short term time frame right through the earnings announcements, taking advantage of that volatility crush that occurs after the earnings announcements. That's how we profit on these trades. Along with Apple, we have Amazon. Amazon will declare on Thursday, May 1st, after market close. A little bit more volatility here. Amazon will move a little less than 7% is what the market makers are forecasting. All right, that's what the estimated move, and so that's what the options are pricing. Amazon is a great stock to trade because there's a lot of liquidity in the options. It is a $185 stock, so we have lots of strikes to work with, and we can really put on a wide iron condor, meaning selling premium away from the money, away from that 185 price, and well beyond that 7% is what we're looking to do. Maybe over 10% away is where we would sell premium, as long as we're hedged and as long as we get a certain return on our risk. Okay. Now, also along there, we have McDonald's. McDonald's is coming up on Thursday, May 1st, before market open. And again, here you have another mature company, but look at the trend. All right. Nice little uptrend here for McDonald's. All right. Expected move here of less than 4%. So if you're looking for a stock that has been trending higher and has not been following the market, McDonald's is right up your alley. Good company. So here we might expect some positive results, but even then, what we would expect then is a move of, say, 3% higher or even 4% higher. Okay, but nothing earth shattering like a 15% move or anything like that. That's not at least what the market makers are expecting. Okay, now on Friday, we get into the oil companies. So Chevron will declare on Friday, May 2nd, before market open, and the expected move here is less than 5%. So you may be looking at this big gap down that it had, where it's going from literally 167 to 145 in 2 days. Okay, that's not an earnings event. All right. Through those earnings events, you're going to see a much quieter pattern. That's all we're concerned about, is what happens through that earnings event. and we would be looking to sell premium here on a nice $138 stock, with maybe even using options that expire Friday, this Friday, May 2nd, or going out a week later to May 9th expiration, something like that. And then in the same industry, we have ExxonMobil. Now, ExxonMobil will declare Friday, May 2nd, before market open. All these stocks that we have this week on Friday that declare on Friday, we don't have any qualified breakout candidates. They're all quiet stocks. They declare Friday, May 2nd, before market open. And look at that expected move. I mean, less than 3%. Okay. Well, at least no more than 3%. I mean, really, really quiet for $100 stock. To move $3, is not much of anything, really. All right. So those are our quiet candidates for this week. I mentioned that we got a lot of stocks, and we're going to get into next what everybody loves. Okay. They love the breakout stocks. All right. And if you like what we're talking about here and you can resonate with how to make money through these earnings events where you're not subject to the volatility of buy and hold, okay, you're actually able to make money just around those earnings events. All right. Then like and subscribe. Like these videos, subscribe to our channel. We talk about this each and every week. We have a great track record of providing winning trades here just on this show, okay? Not to mention what we do in our publications and where our subscribers profit as well, and the trade alerts that we send out each and every week, okay? I've sent out 3 today already to our subscribers. 3 trades already out today for our subscribers. So let's get into these breakout stocks, all right? Breakout candidates are stocks like this. Okay, now this is an example. Akamai does not have earnings this week, but as you can see, earnings are very easily seen in a breakout stock. This stock moves around like crazy right around the earnings events, big volatile moves each and every cycle. A lot of fun to trade, and definitely a profitable stock for us. All right, now oh my goodness, for some reason my trade, if we go to the charts here, we're going to have FFIV that declares after market close today, I believe. Let me just double check here as we look at the chart. For some reason my chart didn't save, and yes, they do declare today after market close. Okay. Now, the expected move, well, that is correct here. We have an expected move. See, so let me just change that to Monday. Monday, see here, Monday, 428, right? AMC, after market close, is what that means. And the expected move here is around 13%. Okay. And I know that because I entered that earlier on this chart, and we, for some reason, did not get the, it didn't stick. So we will get that corrected right now, just so I can have a little track record of that. So there's earnings that's today after market close, and the expected move here is a little greater than 13%, as I mentioned. Now, a stock that is mature in their cycle, but still appears here on the breakout candidates is United Parcel Service, okay, UPS. And they will declare on Tuesday, April 29th, before market open. And the expected move here on UPS is, look at that, greater than 11%. Okay, market makers are predicting a pretty big move. Now, look at last time on UPS. You can see, look at this gap down after the earnings announcement. Okay, this is why UPS is still on our breakout list. And you see here, a move. They had an estimated move, and the stock actually did better than that, and then sold off during the day, but had a very nice move prior to that. And if you go back and look at the history of this stock, you're going to see those continued movements. All right. So UPS, greater than 11% move, and that is tomorrow morning before market open. Okay. Also looking at Spotify. This is a $600 stock. Can you believe that? Spotify is a $600 stock. They are going to have earnings tomorrow, Tuesday, before market open. That's April 29th. The expected move here is greater than 13%. And just like on IBM, you can see these earnings events that pop up here, these gaps every time that a stock this stock declares earnings. But look at this, it's actually holding up pretty well when compared to the broader market. Take a look at that. It's still in an uptrend. It tried to sell off, but nope, not having it. And we will see what their results are tomorrow morning. And if this stock gaps up and gets up to that 650 level, boy, that would be breaking this high back here technically, and that stock will take off. Okay, now if it has poor outlook, poor earnings results, okay, we could retest these lows. If you're a trader and you're looking for a neat opportunity and it's not, you're out of time to trade the earnings announcement, then I would look at trading this afterwards. And to me, this is a kind of a key setup. If they have a poor result, and this stock will sell off. If they have a good result, this could be a runner, okay, and move higher. All right. So I want to introduce you to a new stock. We have not talked about this stock before, but it is going back and doing the research, man, this stock is a mover. Okay. This is Gene DX. Okay. Gene DX Holdings. And this stock, look at this. They will declare on Wednesday, April 30th, before market open. So this Wednesday, this will be fun to watch. This is a $110 stock, yet the expected move here is greater than 20%. Greater than 20%. You can see the last earnings announcement back in February that I have listed here. Look at that move on that stock. And then we go back, look at this move back in October. Just these big moves for the stock, okay? So I wanted to identify these for you and just show you there might not be much going on between earnings announcements, but earnings announcements, man, this stock moves. So put this one on your list, WGS, Gene DX Holdings, and as a consistent mover, and we're talking greater than 20%. This stock has moved 40%. This stock has moved 60% before through the earnings announcement, and they're expecting, market makers are pricing in that move for this one. Over 20% move is forecasted for Gene DX Holdings. WGS is the symbol there. All right, now one that everybody has heard of in the financial space by now should be Robinhood. All right, this is a $47 stock. They will have earnings on Wednesday, April 30th, after market close. Stock is doing okay. It was on a nice little uptrend and then did sell off with the broader market and has been rallying here, similar to the broader market. But again, for a financial and a relatively large financial, a double-digit move is a little bit of a rarity. All right, we see J.P. Morgan, Wells Fargo, all Citi, all the big names. They're always on our quiet list. So having a financial like Robinhood on our breakout list is a little unique and definitely one to watch. Okay, as they declare earnings once again on Wednesday, April 30th, after market close. Expected move greater than 12%. Now, a stock that is always popping up on my social feeds is MGM Resorts because, man, it just seems like they're always in the mix for some sort of betting issue. All right. And then also performance issues with the number, the revenue coming in or not coming in on their properties. So they're going to declare Wednesday, April 30th, after market close. And as you would expect, the expected move here is double digits. It's greater than 12%. You can see the last earnings event here. Look at that big move, that big gap up. Literally went from $34 and closed up here around $40. So over a 10% move last time. And then look at this, dropping over 10% previously to that. So market makers, as you probably guess, they tend to get things pretty close to right, or if not right, pretty close to right. And that's why we pay attention to what the market makers are pricing these options at. All right. So this is a $32 stock, doing a straddle or strangle on this, which is the preferred strategy that we like to do is for these and capture that breakout move. This at $32 would be very affordable even for smaller accounts. Some of these that are priced up around $100, they do get pretty expensive, and you need much more than any smaller account. Sometimes you need 20, 40, even over $50,000 to trade these and keep your risk small. That's what I'm talking about. It's keeping your risk small, under 5% of your trading capital. No more than that on any single trade, and you can stay in the game. You can be wrong and stay in the game. Okay. And oftentimes, I trade even less than that on a percentage basis of portfolio. Okay. Now, CVS, they are up to bat on Thursday, May 1st, before market open, bright and early. The expected move here is greater than 12%. I like this because Walgreens is going private, and they won't be on our lists anymore after we did a trade a couple weeks ago. And so now we have CVS, a direct competitor. And look at the last earnings event. You can just see this nice little pop 2 days in a row, actually. All right. And if I have, the previous earnings announcement, look at this, another pop up, and then big sell off right afterwards. All right. So we like to capture that immediate move. Usually don't like holding on to these. With very few exceptions, we will hold the trade longer than a couple of days. Sometimes the moment the market opens, we'll be taking these off. It depends on the stock and depends on the situation, but we're expecting a double-digit move, greater than 12% for CVS coming up here on Thursday. All right, another stock that kind of a meme stock is Roblox. All right, RBLX. Roblox will have earnings on Thursday, May 1st. And I don't know where there it is. They will, look at that, expected move there, greater than 19%. This stock historically has moved 20%. Look at this back here on February 6th. It gapped down about that and then rallied up after the close. Let's see if I have any others. Yep, look at this move back here. The stock was trading at $43 the day before and then gapped up after the earnings announcement to 51. So a $7 move on a $43 stock. Well, that's double digit. That's a double digit percentage. All right. And so that's why the market makers are pricing in greater than 19% move on a $66 stock. So that'll be fun to watch on Thursday before market open for Roblox. All right. Now, Five9 is in the tech space. They will have earnings on Thursday, May 1st, after market close, greater than 19% here on Five9. Now, the symbol there is FIVN. So Frank Indigo Victor November, FIVN, and they will declare on Thursday, May 1st, after market close. All right, now we got two more stocks to look at, but I will let you know there are a couple of big names that we haven't talked about that have earnings events. Okay, and I'm going to talk about a couple of those right now. Now, the reason I have left these off my list, and they are big names, is because they are right in the middle. What I try to do each week on these publications that we do send out for free to our subscribers, okay, is identify the biggest potential movers and the quietest of the quiet. So sometimes that leaves out stocks that are right in the middle. And one of those is PayPal. Okay. PayPal will declare on Tuesday, April 29th, before market open. And the expected move here is right at 9%. So yes, close to 10%, but it's kind of critical that you get the trade right. You look and see what the option market makers are pricing before you do your option trade. If I could get a straddle or strangle off at 6%, or of the stock price, okay, not 10%, but like 6% of the stock price. So I'm talking like $4, or so, which is probably not going to happen. I would do a straddle or strangle. If not, then I need to sell premium. And the problem with selling premium is it's often hard to get any value out of my trade when you go way out of the money. Okay, like when you go 12%, 10% or more. And with the estimated move of 9%, it could easily move 10%. Okay, so this is a tricky one. PayPal has always been on my list. It's always been one of my favorite stocks to trade. But this earnings cycle where they have the option pricing, there's a possibility we will not be trading PayPal through this earnings cycle because of where the option market makers are pricing this. And it may be a little difficult to do. So, hey, no problem. We'll skip it and see what happens on the next cycle. And the second stock, the last stock we'll talk about today is Meta. Okay. Now, this is Look at that, $544 stock as of yesterday. They will declare on Wednesday, April 30th, after market close. The expected move here is 8%. So it's right in that middle no man's land range where it could have a nice move, okay, but it could also be very quiet. And you just don't know what's coming from Meta, even though they're in the news all the time. All right. So it'll be interesting. We might just sit on the sidelines through this earnings announcement and see what their outlook is and see where what's going to happen with the stock. But trading a straddle or strangle on Meta right now with the stock trading at $544, you would be looking at probably a $3,000 trade, and that would only be appropriate for accounts that are well over $50,000. Okay, if you want to keep your risk below that 5% number, 5% of your portfolio. I don't like trading more than that because just if you're wrong, the recovery period takes a little while longer than if you're trading those smaller dollar amount trades, and you can recover much quicker. But Meta, they will declare, as I mentioned, Wednesday, April 30th, after market close, and the expected move there is 8%. All right, so one more look at our list for this week. It's pretty extensive, but as I mentioned, PayPal and Meta are not on that list just because of what their estimated moves are. So we're looking for the biggest breakouts on the left and the quietest moves on the right. You see Apple, Amazon, McDonald's are all there. Chevron, ExxonMobil, all quiet. Microsoft even on the quiet list. Coca-Cola, Visa, quiet. And then big potential movers like UPS, Spotify, GeneDX, MGM, Robinhood, Roblox. And that takes us to what we would trade for this week. So let's get to that. All right. And again, if you like this content and you find it valuable, and if you're trading options, you should find this valuable because you can make a lot of money by trading these strategies through and around the earnings events. And just go over to ewotrader.com and you can learn about our publications where I generate these trades almost daily for our subscribers. All right, so if we get to our list, I don't know if it'll pop up, but we'll see. Let me get into last week's trade on Intel. Now, last week we did a trade on Intel. This was a strangle. Now, this was a very affordable trade. The debit came in for the strangle around $180. So even if you were trading a very small account, say less than $10,000, you could even trade up to 2 contracts on this, and your debit would be around $360, $380, somewhere around there. Okay, and that would be about 3.6, 3.8% of your portfolio, definitely within that 5%. So let's see how we did with Intel. All right, well, Intel had earnings, and look at that, it popped up a nice little move, moved up 2 days in a row. Okay, so after the earnings event, it moved up 4.5%. But as you see, it is blocked by the little circle a little bit. But you see, after our trade, when we got in around 1850, the stock moved up 2 days in a row, and then again through the earnings event, and that led to a 60% profit on our trade. Okay, that profit was $110 for 1 contract. So if you did 2 contracts like I was talking about, that would be $220 approximately in profit. That would be a 2.2% return on portfolio on a hypothetical $10,000 account. Okay, so a very respectable return in 4 days. In 4 days, a 2% return on your portfolio in just 4 days. Very, very respectable. So we're back on the winning track. We've had a slew of winning trades before. We did have a loss last week, but now we're back on the winning ways, and we hope to get that trend continuing with our trade for this week's. And we are going to go with Roblox. All right, RBLX is the symbol here, and we are looking for to capture some of that almost 20% move that the stock experiences here. Now, this trade is a little bit more expensive. Okay, this is going to be, it looks to be around $700 or so for the strangle. So you might need a $12,000 to $15,000 account to trade Roblox. All right, but they will have earnings on May 1st before market open. And again, we're expecting a big move from Roblox, even though it's made this big move already, rallying higher. That had nothing to do with earnings. So we hope that trend continues and we get a nice pop on the or drop. It doesn't matter. And you can see the last earnings announcement. The stock dropped. It went from $75 to $60. Opened at 60 before rallying back up. All right. So a big move from 75 to 60. It moved $15 on a $75 stock. It moved $15 on the open. Okay. That's the type of move that we're expecting on Roblox. All right. So that's our show for this week. Boy, we got everything in a not bad time. I was hoping this. I thought this show might go a little long for this week, but we did good on time, and hope you found this of interest. We do it each and every week, and by going to ewotrader.com, take a look at our results, and consider being a subscriber, because we would appreciate it. And you can get more of these types of trades each and every week, because I send them out all throughout the year, even when earnings are lots of earnings like this week, or when there's few earnings in other weeks. Hey, there's always a trading opportunity. So everyone have a great trading week, and I will talk to you again soon. Take care.